Good morning, traders. Richard here in quick Ichimoku cloud chart and artificial intelligence trading review to show an update on the previous show where we're highlighting the trade ideas that artificial intelligence and Ichimoku cloud chart analysis have identified. We're going to review the MAG7 stocks and the most recent trade updates. On those, we've had some great news coming out. Alphabet beat revenue top expectations, Amazon top cloud expectations, Microsoft expect strong growth in the cloud, but Meta shares actually there some issues regarding the AI spending and legal scrutiny. So there's a couple of things, but the news flow has been generally positive on the MAG7 stocks in terms of the earnings. Let's jump straight into the Fulgent AI engine. It sits on the Metastock platform. Here's Apple shares. The last two trades we've done is up 10%. Got out of that one when Apple hit the resistance target there, and then the second trade is still active, and that one's up 8.24%. Will be interesting to see where this particular trade is going to go. This particular trade was taken on the back of this cloud chart support rebound. That was a major cloud chart support zone, so that was a ideal entry point for this particular trade. But yet again, the volatility breakout signal did give us a nice 10% pop to the upside, and then it hit our upside resistance targets. We kept the second one on to see where this one's going to go. It can find support at this 266 zone, but there is downside risk to the top end of the Ichimoku cloud and then continue higher. The good news is we're back above the top end of the Ichimoku cloud, and that's bullish from an Ichimoku cloud chart perspective. So now I'm also be waiting to see when we'll get the next artificial intelligence trade signal on the back of that. But so far so good. Apple doing very well. Next up, Amazon. Great trade there. Volatility breakout signal we got here. We also had a fantastic rebound from this cluster of cloud chart support levels that comes from previous cloud chart support zones. Strong rally broke through the bottom end of the cloud, top end of the cloud, and then a strong rally higher, and we've up about 31% on this trade and 31.5% on the other one. Now the Fulgent AI stop loss sits here at 243, but I would move a trailing stop right up to above these old highs here, just to see. Quite possible for it to come back to retest these old highs, but you can see now fighting that old high there to see if it'll become support. The new support zone is this 248 zone, so you want a trailing stop just below that in case we get a bit of a consolidation back there to digest this move. If we had to look at a Fibonacci retracement of that particular move, then we can see where was that going to bring us to. Oh, let me just put that one there. Hold on, there we get to, there we go. So yeah, 23.6, so 250. So any kind of trading stop should be slightly below that zone, because we could see a bit of a consolidation back and then a continuation of the rally. But so far so good. Nice strong rally, 32% there, 31% there. Captured some really great moves using artificial intelligence together with Ichimoku cloud chart rebound buy signals on Amazon. Google next up, one of our favorite ones there. Two volatility breakout signals there, 23 and 27% respectively. Also very comfortable in taking this trade here, because at this point in time Google was rebounding from this cloud chart support zone, as well as these very close to these lows here of October and November of last year. So this was a really great move. You can see the previous signals also create some really great moves in Google using the volatility breakout AI signals. Trailing stop, once again, look for the standard line and turning line Ichimoku cloud. The Fulgent AI stop loss is around about here, but that's quite wide. I would move it right up. The top end of the cloud there is a critical support zone, so 333, slightly above that zone for a trailing stop on this particular move. But so far so good. A great move in Google. The results are going to drive it higher. Meta, bit of a problem here. We had a volatility breakout signal here, as well as a cloud chart rebound buy signal at 537, 25% rally there. Broke through the top end of the cloud, hit the resistance target there. There was another resistance zone there. Just pop that one in there. but then pulled back and consolidate, got out of this one in and around that cloud chart there. When the support failed, it didn't stay above that zone. Now it's fighting heavily to stay above that top end of the Ichimoku cloud. There's downside risk to these exponential moving averages, as well as the top end of the front end of the cloud. So we could see this move here could also experience a Fibonacci retracement. Let's see where this Fibonacci retracement could come back down to. So that's a 23%, yeah, that's quite reasonable, and a 38% retracement, yeah, will be right around, just slightly above the top end of the front end of the Ichimoku cloud. As long as Meta stays above this top end of the Ichimoku cloud, there's a new bull rally on it, but when we start trading below the cloud, then we're moving back into bearish territory. So that's the problem with Meta. But nice, tasty 25% rally there in a couple of weeks in Meta. Microsoft slow burner there. We had a beautiful short selling signal there from a cloud chart perspective, a nice long short, and then we started getting out of the short in and around this major support zone that we see there from the from this exponential moving average 987, and then it started to find support there. And then we took these volatility breakout signals because these levels were critical cloud chart support levels on a weekly chart as well. So they were major levels. And also by this time, we've had a fairly long duration of price action below the Ichimoku cloud. We're not out the woods yet. We were trading counter trend here because price action below the cloud is ultimately bearish. We were just trading the rebound back up to cloud chart resistance there. So this trade, we're out of this one, 16% there, but we're still in this one of 18.8% to see where it's going to go. If it can break past the top end of the cloud there, that will be great, but there is downside risk that could come back and retest this 396 zone. So it's critical to watch out very closely how Microsoft is going to respond this coming week. But so far so good. Nice volatility rebound trade there. You can see the volatility breakout signal. You get a few. There are a few that get stopped out because it is a volatility breakout trade strategy. So you do get quite a lot of these particular signals. But if you combine them with Ichimoku clouds together, there are some trades, for example, that you would not be taking below the Ichimoku cloud. But so far so good. Those trades worked out. NVDA. Beautiful move there. That was a cloud chart rebound buy. It comes off this major support zone here from the Ichimoku cloud chart perspective. So that was up 26.7%. And that volatility breakout signal, we had to stay in that one for quite long. You have to be very patient with NVIDIA. It's a stock that I've been buying, accumulating below the 175 zone. Every time it gets to these critical support zones, I tend to go long in it. It's still, it was in this base trying to break out, failed, and now it broke. It's trying to break out of this huge base. You could argue that there's a massive double bottom pattern here that moved down, up, and then another leg down and up. So, but we're out the woods now, broken past these resistance zones here. So that 194 is gone. It's now just critical to see if we can have a sustained rally beyond these two resistance levels there. Let me just zoom in here. The Fulgent AI stop loss is at 197. I would personally move that up a little bit higher just to be above just below the 203, just below the 200 zone there, just to keep that in mind. But so far so good. Fantastic rally in NVIDIA using artificial intelligence. Tesla's a bit of a problem child at this stage. It's been bearish since January when it sliced through the bottom in the cloud. You see we've had a few volatility breakout signals that gave you short and quick profits. This one was also taken on the back of the volatility breakout signal, as well as this 350 support zone, up 17%. Got out of it when it tried to break through the cloud chart resistance for the second time there. You can see the bottom end of the Ichimoku cloud is a resistance zone. Ideally, you want to see Tesla to break past the top end of the Ichimoku cloud. Then only will it be back in bullish territory. But so far, so good. In the downturn, we've been trading the rebound rallies back up to critical resistance zones. That's worked out. It's now fighting hard to find support here at the standard line of the Ichimoku cloud. It can move and rally from that zone back up to make another attempt to try and break through the resistance zone. But you can see moving average is still trending down and providing a bit of overhead resistance. So a lot of work. Tesla's got a lot of work to do to get past this top end cloud chart resistance zone to be back in bullish territory. But so far so good. My two favorites here was Google, certainly did very well. NVDA has done very well. Watch out for the trailing stops there, and then Amazon also keep a close eye out for the trailing stops, just move it higher. But so far so good, combining the Ichimoku cloud and the volatility breakout strategy from the Fulgent AI engine that sits on the Metastock platform really delivers some fantastic trading profits. If anybody wants some more information, it's the back of the show, some links to look at the Fulgent AI engine and the Metastock software. For the regular viewers and the new ones, thank you for watching. Until next time, happy cloud chart and AI trading. Bye for now.